Hey, this is Travis, and I'm back with another income report, trying to be fully transparent, letting you see what this journey to 100K case study looks like. I'll explain what that case study is here in a second for those who are new to these income reports. Since I'm going to be covering my real money investments and things like this, I do have to cover these standard disclaimers. I encourage you to pause and read these. Pretty much the summary is everything I'm showing you is for educational and entertainment purposes only. I am not a financial advisor, nor do I have the value system of one. I don't believe in giving you advice. I believe in empowering you to make your own decisions. I'm mainly just an educator. I'm just showing you what I do, hoping you can pick up a few nuggets here and there to make your life better. Now, what I said earlier about the Journey to 100K case study is what I am doing is doing a case study showing people a simulation of how I achieved financial freedom in 5 years. And I started with a 10 grand real money account, and I'm trying to grow it by 60% a year for 5 years. And I'm taking a three-pronged approach. This is not just going to be investment returns of 60%. It's a three-pronged approach. I'm contributing to the account. Some of it is going to be my own investment performance. And the other prong is going to be a strategy I modeled after Warren Buffett. But here's a snapshot of what this looks like if I'm successful. Year one, as of this recording, is already done. I was successful. I did wind up growing a 10 grand account by 60%. And so now we're on year two, and my goal is to grow it from 16 grand to 25 grand. And this is what it will look like if I continue all the way to 10 years. A person can, if they can grow their account by 60% a year, can wind up having $1 million account in 10 years. Of course, this is a theoretical example. I'm not promising you'll be able to do this, but this is how the numbers would play out. So now let me go ahead and move on to my income for this month. Now, what I am going to do, this is going to be a different income report than normal because we had a 10% correction in the stock market during the month of February. So that kind of is I would say a not normal event. Well, it is a normal event, but you probably want to know, well, how did he survive a 10% correction? Did he lose all his money? So I've actually broken this income report up into about 3 parts. So I recorded a video kind of encouraging people during the correction, showing them what my account looked like, literally like the day the market dropped almost 5%. So I showed them what my account looks like. This is a video I recorded for my YouTube channel. So I'm going to show you a snippet of that. Part 2 is I'm going to come back after that snippet, show you where my account stands directly after the correction, after it's settled and it's on its way recovering. And then in the third portion, when the month of February is over, I'll let you know where I stood, how I survived the correction and where my account stood after the month of February. So without further ado, let me drop you into the first portion of this income report. And so I just wanted to record this kind of impromptu for days like this where the market is down pretty heavy, 4% today alone. That volume is picked up pretty heavy. So it's been kind of in free fall the last few days. We can scale out to a 9-month chart, kind of see what it looks like in relation to the big picture. Or you can even scale out to a 2 or 5-year chart and kind of, yeah, it's pretty drastic. The volume is super high, 291 million. The highest that volume has been back then was back in 2016. Matter of fact, let's drill in here so you can see it. So close to 291 million shares were traded today alone. The last time it was that high was back here in 2016. But look what happened. It dropped down pretty heavy, and then it shot back up. So I'll touch on what I think here in a second as I'm recording this here on February 5th, 2018. But we can also look at CNBC. People are probably getting scared looking at CNBC. They're giving all these regions while the S&P 500, the Dow plunge, and the selling continues in after hours, which means tomorrow it may open even lower. Dow plunges more than 1,000 points. Stock market loses more than $1 trillion in value. Biggest one-day drop ever. This kind of stuff instills fear in people. And I recognize that I'm a weirdo, meaning that I get happy when the market crashes. And I temper that excitement with empathy towards the people who are suffering right now, the people who don't know how to trade options, who don't know what me and my tribe know. Because today I made $1,000 on this down day alone, and it's fluctuating in real time because the stocks are still trading in after hours. So, I know other people are suffering, and here I am making money overall. So I'm not really worried about it. There are several reasons why I'm not worried about it too, which I'll get into in a second. But I just wanted to show you that people tell you that this is normal, you just suffer through it, and which it is normal, but you don't have to suffer through it, because I just showed you real-time proof that somebody made money today. So when somebody's suffering, on the flip side of that, there's somebody benefiting from the same event. And don't attach any judgment to it, because if you attach a judgment to it, like that's wrong, that's not fair, you'll never be rich. It's just a fact of life. There's no right or wrong or fairness to it. It's just a fact of life. I know things that other people don't know. I resolve that by teaching people what I know and coaching other people. I could keep it all to myself, but then people call me a rich, greedy jerk. Now I share it and they call me a snake oil salesman. So it's neither win-win, but regardless, I'm happy I have a tribe. I'm happy I'm teaching people how to make money during down markets and how to protect themselves from moments like this and create bulletproof strategies where they don't have to really worry about drops like this. Like, I am super calm, I'm super happy. And the reason I'm happy is because drops like this, there's several reasons. The rest of the reasons you'll learn in one of my programs if you ever join. But one of the reasons why is I got a better entry point now, which means I have the rest of the year to make money from this very low entry point. It's typical buy and hold, the same principles. You buy it, they say buy on the dips. You don't sell on the dips. Most people sell on the dips. Days like this, they're scared. They're probably cashing out their long-term retirement account. No, these are the days, if I was a long-term buy and hold investor, I would buy more. The market, from where it was, the previous high to now, maybe close to 5 to 10% drop. I'm not going to add it up here for time's sake, but that's cool. I'm getting my stocks cheaper. That's for a buy and hold investor. And as an option trader, it's the same principle. I'm getting in at a very low entry point, and if the market goes up, the way options are super leveraged, and members have seen this proof of this. As a matter of fact, I have my spreadsheet pulled up. Well, I won't pull up for time's sake. Just know that if I bought a call option right here, where it's at right now, and the market rallied 4%, from this point, the call option I usually buy, it would double in price. All the market has to do is go about 4% for my entry points, and it would almost double in price. And as a matter of fact, I said I wasn't going to pull up my spreadsheet, but I'll show it to you here. There's already a trade this year where I did that. I bought 2 SPY call options on 1-2, and you can verify this. You can see where SPY was on January 2nd. I bought them for about $600 there, and then you can see there just what, 116. I sold one of them when it doubled in price, and so just selling one of them paid for both of them. So I still have one on, and it's what we call a free trade, playing with the house's money, things like that. So that's what, and just in that short time frame, a couple of weeks. So that's what I'm looking at doing right now, that it's fell so far. I know that if I get another one and then the market recovers from here about 4%, that will also double in price. So just want to drop in, give you some encouragement. If you're suffering through this right now, be encouraged. There is some hope. There's things you can do to, offset suffering through moments like this. So you take care, and I'll talk to you in the next trading update. Bye-bye. Okay, I'm back, and what I want to do is, first, I was talking about buying a call option and how I only needed the stock market to go about 5%, and that call option will double. Well, I did wind up buying some call options here, and you can see the market has not entirely covered yet. Let's see. Yep. So let's zoom in here. So the market, it may continue falling. I'm recording this literally about mid-February, February 18th. So the market is kind of going up a little bit, but still hasn't fully recovered. It may fall a little bit more from here. But I did wind up buying some call options at the bottom, like I explained in that earlier portion of that video. And so here you can actually see the profit so far. So they're up $500 just in those few days of recovery there. And I don't know, where they'll end up, but I just want to show this, that, I say what I mean what I say. I teach what I do what I teach. So I'm telling people, hey, the correction is a great time. They're nothing. They should be seen as opportunities instead of something to be feared. So anyway, let me come to the account here. So we only have let's come back here, look at the chart. So the market's only been going up, 4 or 5 days in a row since the bottom. Here's where the account stands. Directly after a 10% market correction, I showed you where my account stood directly during the correction. Now, I don't know if the correction is over, but the market has been going up for a few weeks. So here's where the account stands mid-February. The market is up 1% for the year. My account is up 9%, almost 10%, 9.9%, so about 10%. This is booked profit. This is profit I have actually already earned that is protected because it's not out in the market right now. So this is where I stand mid-month. So again, I don't know where I'll be at the end of February. I could lose it all, or I could, I have some open trades here. Let's scroll all the way to the bottom where I, keep my open trades right here. I have some open trades. These represent potential risk here. So these trades could lose money while they're open. And if that's the case, then this 9% will go down a little bit more. And the beauty about my open trades that I, share with members of my paid community is that because of this correction here, as I said before, is one big opportunity. The trades I made during this correction, in addition to the SPY call option I just showed you, I made some other trades here. If they hit max profit, if they wind up being profitable, then I am virtually guaranteed to hit my income goals for year 2. Said another way, that if my current trades that I have open wind up being profitable, then I will grow my account by 60% in year 2, virtually guaranteed. Unless I absolutely do something very, very stupid to lose money, then I'm done for the year, pretty much. I've worked 2 months out the year and I'm done. And that's what I like. I literally could take the rest of the year off. If I wasn't a coach, that's what I would do. I would take my money and run. I'd take the rest of the year off, come back next year. But since I'm a coach, since the market is still, moving throughout the year, I continue to teach students and continue to show different things. But again, all the open trades I have open that I open right around the bottom of the correction, their profit here, this is a model paper trade I teach people, but their profit will be about $3,000. So they will bring in about $3,000 profit. So, but my potential profit I haven't earned yet, trades are still open. The potential profit I'll earn is $3,000. I have already earned $1,583 so far for the year. So 1,583.61. So we're going to divide that by my starting balance of $16,000 for the year. So that's going to be 29% growth of my account. But remember, I'm taking a 3-pronged approach. So some of the growth is coming from contributions I'm making to the account. And those contributions will more than make up for the difference here between 60%. So half, I'll continue trading, but if I stop trading, then half of that 60% growth will come from my actual investment performance. The other half will come from money I've contributed to the account. All right, so I don't want to make this income report too long, so let me stop here, and then I'll come back at the end of February to let you know where I ended up for the month. All right, I'm back for the third and final portion of this income report. And I am recording this right on March 2nd. So this is after the 10% correction. The market recovered a tad bit and then it fell a little bit more. So I'm recording this right after it fell a little bit more. So before I show you where my account stands at the end of February, I want to come back here because I'm not sure if I told you this yet. I know it's in my paid community, but in this income report, I want to let you know how I plan on earning 60% this year. And not really earn, I need to change this to grow. I need to get in the habit of saying grow, because my 60% is not coming from trading profits. I plan on growing the account by 60% each year. But as you see here, the breakdown is a combination of trading profits and me contributing money to the account. So last year, this was a little bit different. You can look at the original case study videos to see my plan for growing the account by 60% in year 1, but this is year 2. I plan on depositing a tax return of $3,204. That's going to be the equivalent of a 20% growth on the account. Now, why am I doing this? Because again, this is a simulation of how my wife and I achieve financial freedom. There was only a small handful of people that looked over our shoulder the first time we achieved it. So now I'm recreating what we did. We got out of consumer debt. We realized that the more we saved, the faster our net worth grew. And so if you were growing the account, like last year, the account grew in 60%, and like at least 20-30% of that was trading profits. Would you be encouraged to add more money to the account? Yeah. So that's what we did. Okay, next is going to be guide contributions, get out of debt contributions. Again, we got out of debt. Every time we got out of debt, we freed up more income. These were increased a little bit from last year. So that's going to be an equivalent of $267 a month that we freed up by canceling cable, stop going to Starbucks as much. We sacrifice. That frees up some money that we can add to our trading account. And that's going to be the equivalent of 20% a year. So far, you can see 40% of that 60% growth is coming from personal contributions. Now, I know this gives fuel for some people to attack this, but I'm like, well, this is no different than buy and hold. A lot of people's buy and hold accounts grow each year, and they're like, oh, I made so much money, but they never factor in most of their growth comes from their own personal contributions. So this is no different than buy and hold dollar cost average. And then we lead to our growth in income trades. This is me trading options. My goal is to earn the equivalent of $200 a month or 15% a year. Last year was 18%. And then the Family Freedom Fund, which uses the Buffett strategy, using the strategy I modeled after Warren Buffett, where I get paid to buy stocks I want to own. And I only plan on earning 5% on that this year because I'm being a little bit more conservative this year with that. Last year was 18%. So why did I reduce my trading performance? Well, I noticed last year when I had my trading performance goals pretty high, it gave me performance anxiety. It stressed me out. I was like, I got to hit these goals. I got to do great as a trader. And it stressed me out. And when I'm stressed, I can't make good decisions. So this is just a psychological trick for me. Do I think I'll earn more than 20% trading performance? Yeah, that's child's play. As an option trader, you should easily earn 20% with no problem. But if I put it as a goal higher than that, it makes me feel like I have to hit that goal. So this drops the bar a little bit lower for me mentally, and it puts me in a very calm state. So that's why I've reduced it down this year. But regardless, even if I only get 20%, these 40% of that will grow. It will come from my personal contributions. So the way I look at it is, even if I'm a complete screw up as a trader, then I'm at least guaranteed to grow the account by 40% this year just on my personal contributions alone. Now, with that being said, let's come here and look at my trading performance for the month of February. So this is after the market correction. So this is after the correction. The market recovered a little bit. So where did I wind up ending up after that 10% correction? The count is up 11.47%. And so this is not the closing price of the S&P as of today, March 2nd. I think this was the closing price. As a matter of fact, let me put the closing price on. Let me find the closing price for the end of February, February 28th. And the reason I do this is a side-by-side comparison. I want to see, like a professional money manager, they usually, depending on which kind of money manager you are, but most people prefer compare their performance to the S&P. So I'm seeing how well I'm doing compared to the S&P 500 starting date of January 2nd. So as of the end of February, February 28th, 2018, my account is up 11.47%. The S&P in that same time frame is up 0.84%. So I'm clearly beating the market, right? And you may look, wow, after the correction, the market had 10% correction, a 10 to 12% loss of money, but still he's up 12%. So you may look at that and think that's good, but let's keep it in context of what actually happened. Actually, I'm actually up a little bit more, which I'll explain here in a second. What I'm going to do is delete all of my February trades right here, and hopefully I don't screw up this Excel. This is this is my master copy. So I'm going to delete all of February, and let's come back to see where I was at the end of January. I was up 26%. Okay, now I was up 26%. Now I am up 11%. All right, so what really happened is I gave back some profits. So that's keeping things in context. So the market had a correction and my account also had a correction. That is why I only, report booked profits. This 11% is profits I've already earned. The cash is off the table. It doesn't factor in open trades because I actually have some open trades down here at the bottom. I keep a log of all of my open trades that have not been closed yet. If all of these hit max profit or they turn out, the account will have about an additional $5,000 in profit. So the account could be a lot higher here in the next few months, but I don't count this yet. I've made that mistake before, is counting profit before I earned it. Now, earlier I said this is not entirely accurate. Here's why. I made a trade that brought in a $1,600 profit here. I don't have it in the official calculations yet, which I will probably explain later in another video. But this is a trade I made right during the correction. The correction actually, let me put up a screenshot for you. Well, I already showed you that. I showed you that I was making money during the correction. And this actual stock allowed me to make even more money during the correction. So if we put this in here on 2/6 when I made that trade as a $1,600 profit, the way I manage these trades, this profit is mine to keep no matter what. I don't give it back at all. It's guaranteed profit, but only because of the way I manage this position. So if we put that in there, which is accurate, I did make that money, then we could see the account would be up 20% after the correction. In all actuality, I gave back maybe 5% of my profit. But again, I'm not putting that in the official calculations yet for reasons I won't have time to get into in this particular video, because this video is already long enough. So what I want to do is come back here and end with something I put in the first inaugural episodes, where these common claims or myths you will hear about options. And these myths, these limiting beliefs that people program you with, they keep you broke, in my opinion, because I heard these same things. I still hear them today. Options are risky. You can lose all your money. You talk to professionals, you talk to accountants, it doesn't matter. A lot of people have this belief. But what I say is trust but verify. It's what the Army taught me. I didn't blindly believe this, and maybe because I'm hard-headed, but I'm like, you know what, trust but verify. I attempted to verify, and what I discovered is, options are highly leveraged, but when used correctly, they can reduce your overall investment risk. Okay, you saw how much profit I gave back. Worst case scenario here, I was up 20-something%. So my account corrected just like the market. I gave back some profit. But this performance you see right here, 11%, this performance is made by keeping like 90% of my account in cash. Okay, generally, give or take, it varies, but most of my money stays in cash. I don't do the whole buy and hold of risking 100% of my account. That's crazy. So no, I can earn these returns by keeping the majority of my money in cash. So next thing here, going back to my performance, I'm up 11.47% in 2 months. So and that's on a 16 grand account. That would be the equivalent of $5,000 profit on a $50,000 account, or $2,800 a month. And the reason I'm showing this is because in the beginning of this case study, I said I would let you look over my shoulder and watch me grow a 10 grand account into a 100 grand account that produces 5,000 or more in income each month. But what you may have not realized is I'm already showing you that, even though this account is not at 100 grand yet, because this performance I've earned so far on a 100 grand account, that will be the equivalent of $11,470 in profit so far for the year, or $5,700 a month in profit. And if you had a larger account, then that would be the equivalent of about almost $23,000 in profit, or 11 grand a month. Now I want to stop here because people understand and people wonder why I say that you can retire early with less than $1 million if you know how to successfully trade options. And that's what we did. We left corporate America well before we had $1 million. It was, six-figure account or six-figure net worth. This is why, what you see right here, and it's also why I gave up, not really gave up. I stopped stressing so much about being a millionaire. And it's funny, when you're making 11, 12, sometimes 20 grand a month, you think you want to be a millionaire. And I thought I really wanted to be a millionaire. But once you start succeeding like this, you realize it wasn't the $1 million that you were really after. You were just after the freedom of being able to have an income source you control, the freedom to do what you want, when you want, with whomever you want. And when you're making 10, 11, 20 grand a month, that becomes a reality. And that desire, maybe for other people it didn't, but that desire in me to become a millionaire kind of reduced down, or it not really went away, but it wasn't as important anymore. What was important is, can I make enough to finance our freedom, our lifestyle freedom that we want? And based on the performance and based on what you're seeing so far, yes, you can clearly see why we were able to do that, even with a six-figure net worth. And before I let you go, I want to let you know that it's just not me doing this, because I teach this to members inside of my community. And here are some of the results, the recent results that students have put in the members area. One made a little over $16,000. One had some huge profits here on LVS. Another one reported a gain of 185% profit in 3 days. Now, of course, this is not guaranteeing you'll be able to do exactly what they do. These results are exceptional. These results are not typical. They're not what average people do, which is why I encourage people not to be average, be above average, choose to be above average, hustle, bust your butt, put in the effort to learn this, and then reach out for help in our members area so we can get you to having profits like this. And so that's my way of inviting you to our community. If you're not doing this right here, why wouldn't you join? I know the community is a significant investment. That's something I know to be true. But the ironic part is the only people who complain about how much it costs to enroll in my program are the people who aren't a part of my program. These students who achieve this, they're not complaining. You can see why. In me just doing this, somebody earning 11 grand a month, if they had a 100 grand account, a lot of people join ours and they're behind on retirement. They only have 100 grand in retirement. And were they able to do this with options? Do they complain that they had to invest several $1,000s to join our Success Academy? No, because it's well worth it. And if I'm showing them, what you don't realize is that if you grow your account by 60% a year and you take this out to 10 years, the account actually grows to $1 million. And so we cover this in our program, and they can see this happening every single day. They enroll in a program where the coach is showing them, hey, here's how you can become a millionaire in 10 years. Do you think they're going to complain about investing a few $1,000s to learn this? No, but that's for you to decide if you think it's worth it. How much is your freedom worth? But regardless, whether you join us or not, I hope these income reports are shining some light, busting some of the myths you heard about options, and giving some hope and inspiring you to learn more about this life-changing skill. And that's all I have for you. You take care, and I'll see you in the next income report. All right, bye-bye.